Number 7, overview of the Forex market commodities indices. We start with the CFTC data report. Quick overlook on the Euro side. Looks like healthy longs still active. Last week, longs and shorts added. Shorts added a little bit more, that drove the net a little bit down. Overall, what I like to see is the open interest is picking up. That usually tells you there's a healthy, trendy market carrying on. In GB land, we saw a lot of movement last week, but not so much positioning, so about 100 million added. Shorts covered a little bit. Open interest still very strong, but GBUSD's last week's move were very out of anticipation. In other words, everybody anticipated these levels to get hit about 140, but I think the way it did it was a little bit unorthodox. Specifically, you could see in the options market, nobody was really anticipating that either. So quite interesting moves, and probably with a little bit more upside as CFTC data is supportive of the trend picking up. Quickly having a look at the inflation expectation, which is the blue line. I've overlaid it with NZDJPY, not a pair I trade a lot, but next week we have the RBNZ active, which makes it more interesting to have a look at. Usually inflation expectation is a leading indicator for your yen pairs. In the long term, we are heading higher, but in the short term, we had a little bit of a dip that NZDJPY has not reflected that. That takes me to my next chart, which is NZDJPY on the 1 hourly time frame. I'm expecting this level to hold in the beginning of the week, and ideally I like to take a short on a retouch. If I don't get, I'm quite happily short during the Asian session, dropping back into the midweek range of about 76.50 and lower to start off the week. Calendar wise, we don't have a lot going on in the beginning of the week on Monday for other major currencies, but what we have is for the NZD, so the Kiwi, we will have quarter-on-quarter retail sales, which should give us a slight indication of price action about to happen on Wednesday when the RBNZ sets its meeting. Ideally, what I like to do is I like to catch an early short on this pair and then see how the rest of the week unravels. The big risk event for next week will be Fed Chair Powell testifying on Tuesday. Overall thinking is that bond market sold off a little bit too aggressively, a little bit too fast, and what he will try to do, and his colleagues, is possibly talk down that surge in bonds and ideally want to cap further yield advances in the short term. That will take me to show you the chart of the US 10-year yield. So that will be the key driver for the beginning of the week until we're moving on to Thursday, when we have a little bit more clarity and market starts digesting what Jay Powell said. Looking at the 10-year yield chart, it is aggressively moving higher. In the short term, we have marked 140 to be a stronger resistance. In the longer term, towards the end of the year, we could expect levels to go as far as 160 to 190. But in the short term, there's many participants' anticipation, and myself as well, that Jeremy Powell will try to talk down the advance in these yields. It will be quite a difficult thing to do, but what I imagine is market won't be very bullish until his speech is cleared. Another quick look we have is at EURUSD. There's an interesting story development. It has got little to do with Euro, but more to do with USD. It is commonly known that Euro's basket is made of majority of USD, so if USD goes down, Euro goes up, vice versa. What is happening in the short term is that the Treasury is drawing down over $1 trillion in their cash balance account, distributing this between commercial banks, your JP Morgans, your Goldman Sachs, etc. What that means is that those banks that are already quite cash rich will be even more flooded with money. They will try to likely invest in the market or try to loan out. Now, what does that mean for the dollar? It doesn't take a lot of knowledge of macro analysis or fundamental analysis when about $1 trillion is about to hit the Forex market. The possibility of dollar going down is probably extremely high. Therefore, I'm a bit bullish for the next 2 months on EURUSD. I would like to establish a new long from about these zones, but as long as we're above 121, I'm quite confident EURUSD has got a chance to leap a little bit higher and possibly even gain new yearly highs. But in the longer term, I'm extremely EURUSD bearish. The reason being is, I'll show you this chart. If you're well versed in the yield spreads, real spread charts in the market, then you know that all currencies tend to follow the yield spread. I'm going to give you a quick explanation if you're not on top of these. Basically what the yield spread is, we take one yield from one country, we take the other yield from another country. As a benchmark, it's always the 10-year yield we talk about from the bond market. We subtract those two, and the number we ended up with is the yield spread. So for instance, now we are looking at Germany and the United States. I took the 10-year German yield, subtracted it from the 10-year US yield, and that will give me what we call a yield spread, or the bond spread, which is quite commonly referred to. It's currently sitting at minus 1.65. Projection is that will drop all the way back to -2. Really what that means is that yields in the United States are much more attractive than in Euro, which isn't necessarily something new. But what's new is that this sharp dive that drove the yield spread lower. And what usually happens is, what actually all the time happens, is that currencies follow the yield spread chart, and they're actually moving consistently very closely. But there's sometimes where yield spread charts and the FX spot market tend to diverge, and that's when a trade opportunity arises. So I'm going to overlay EURUSD so you have a better understanding what I mean when I talk about yield spread and currency fluctuations. So here we had, I'm going to take you back a couple of years just to have a feel for it. So you can see majority of the time yield spread leads the way, EURUSD follows back like it did back in 2014. Between 2015 and 16, really not a lot happened. 2017, there was the Macron rally when Macron won the French presidential election, and we had Draghi saying there was a reflation trade and all of that, and Euro really started picking pace. And just to keep track, Euro is the orange line, and it started rallying all the way into the beginning of January 2018, and then kind of started stalling. But interestingly, the yield spread already started dipping and pulling away from the end of September the year before, and eventually, the rest was history. EURUSD catched up with the yield spread chart again. Same scenario we have now. So we have yield spread charts. We had actually in 2019 yield spread charts moved aggressively one direction. EURUSD took a while to follow that, and now we have a new divergence developing here. So my orange line, EURUSD, we have the yield spread chart dipping since last August. But EURUSD didn't really follow, so actually EURUSD went the other way. There's a lot of dynamics why this is happening in the short term, mostly about the reflation trade, and now in the next couple of months we were going to have the treasury drawdown of huge amount of cash piles. But in the long term, when I'm looking towards the summer and out the way, it is very likely EURUSD will touch down here, and we're going to see 115 and lower in EURUSD. So there's a big trend emerging. It's just timing that will probably go towards the second half of this year, just to keep it really in tune what is moving markets in a bigger perspective in the FX side. So we had a look at EURUSD, we had a look at NZDJPY to work our way around data. There's a lot of other data points that are quite actually important, but I'm going to find it very difficult to anticipate or to get any direction out of it until my key Wednesday event is over, after Jeremy Powell speaks and delivers his testifying at Congress. After that, we will have a little bit of movement on Friday when there's more data due from the United States. But my key data will be probably the preliminary GDP quarter on quarter for the United States, and the asset you want to trade when you have a look at that is usually the S&P500. Now, there doesn't tend to be always a bullish reaction straight away, but what tends to be that there's usually a bullish reaction after these GDP prints, because GDP is always a little bit of a worry. Is the economy doing well or not? But after it, so going into Friday, I really expect the S&P 500 to pick the pace, and if it hasn't, move towards the higher end of last week's high and possibly higher. It's really dependent on what Jeremy Powell says on Wednesday. He could absolutely crash the market, which I highly doubt he will be able to. But on Thursday and into Friday, we're going to have so much more clarity about what we want to trade going into March. And the last thing I wanted to say, going into March is the new fiscal year for Japan, which means that we'll have a lot of rotations in now about happening the last week of March. So you're going to want to pay attention to your London fixes. If you don't know what a London fix is, there's an indicator here on the trading view. If you type in London and it usually shows up. That's London fix. It's an indicator, and what it does, it will mark out your 4 o'clock London fix time on your charts. I'm going to take you over to Forex, explain this really quickly. If you haven't yet, try to have a look at my YouTube channel. Have a look at the London fix strategy that explains a little bit more. But basically what it is, every day 4 o'clock London time, major banks between each other, they fix the currency prices, so they all know where the benchmark is for currencies if they want to quote bonds, shares across countries. So it's more of a benchmark setting. But what will be more important is, because there's a lot of liquidity going into the hour before the fix, I'm expecting that as we go into the end of the physical Japanese year, these fixes will be much more volatile, much bigger in magnitude as well. So I want you to pay attention, specifically if you're taking up positions around 3 or 4 o'clock London time going into next week. You're probably going to see a lot of movement. So maybe widen your stops a little bit, or maybe trade your idea after the fix is due, as will give you a little bit more settled market. That's all I had to cover for this week. Quick roundup: looking to sell NZDJPY beginning of the week. As we progress throughout the week, it will be interesting what happens on Wednesday. Expecting EURUSD to stay above 121. Any dips on the 121, I'd like to be a buyer on the back of that Treasury announcement with the cash drawdowns. And then going on to Thursday and Friday, I'm interested to buy equity, specifically S&P 500, to capture new highs. That would be all from me. Thank you.